Welcome everyone to the InsurTech New York webinar in partnership with InsureMo, which is entitled Embedded Insurance. We're here today on February 16th to really dig into how to make embedded insurance work. And as a little bit of a background, embedded insurance has really been a hot area because of the predictions. Right now, embedded insurance represents a tremendous opportunity for e-commerce vendors, manufacturers, banks, credit unions, and other non-financial institutions to be able to optimize or take advantage of the relationships that they have with their customers and offer insurance or risk management services to them. It's projected that the embedded insurance market will reach $70 billion in premium by the end of the decade. So we're really excited to see what opportunities lie out there. I think a lot of people have kind of thought, embedded insurance, that's only for some really simple lines of business like your phone warranties or personal lines transactions. But that's why we're doing this webinar, to really help educate you on what's possible. And our two subject matter experts, Chuck Gomez and Trenham Palmer, are going to be sharing more information about how you can embed insurance from a technical perspective and from a business decision into different types of transactions. So I will introduce both of our speakers. I'm going to share a little bit of context before that, why we're doing this webinar, its connection to our conference, and then we'll roll right into the questions. So first is Trenham Palmer. He is the Director of Digital Insurance for Volvo Financial Services in the United States. And for those of you who are not intuitively familiar, Volvo Financial Services focuses on trucks and heavy equipment. You may be familiar with some of their brands like Mack Truck. Prior to Volvo, Trenham was an entrepreneur. He founded and ran New Light Research. He's also spent more than a decade across a variety of sales and business development leadership roles within commercial insurance and management consulting. And we have Chuck Gomez, who's the head of North American operations for InsureMo. Chuck has over 30 years in property and casualty insurance technology for specialty, commercial, personal lines, reinsurance, and agency and broker. Prior to InsureMo, Chuck has also worked in insurance and management consulting, spending time at brands like AIG, Arch, Guy Carpenter, and Ernst & Young. So before we jump into the actual webinar itself, I'm going to just kind of make a connection here to our conference that's coming up. So for those of you who are not familiar, we're going to be hosting our InsurTech Spring Conference, the 2023 edition. That will be our fourth annual conference. It will be held in New York City at Chelsea Piers, right on the Hudson. The theme is competing on collaboration, which is very much tied into embedded insurance. Ultimately, for insurers to be better at reaching their customers and improve their ability to gain market share, they have to be better at collaborating with external partners, like potentially, in this case, embedded insurance partners. Our conference on the 29th and 30th will have two tracks, a property and casualty track, which will be all day. The agenda is highlighted here, but a salient point is the embedded insurance at the point of sale, which Chuck will also be on that. So if you didn't get enough of Chuck today, you have an opportunity to spend some time with him on the 29th, listen to his panel, and hang out with the InsureMo team. If you're coming from the life and health side, we don't want to exclude you from the embedded insurance discussion and also from our March conference. So this is a highlight of the agenda and some of the topics that we'll be discussing. So without further ado, we're going to jump right into the topics of today. So I'm going to switch over here from screen sharing mode so you can see each of us. So to get started here, I think I really wanted to highlight some of the embedded insurance success factors and bridge into the topic of what really makes it work or not work. Then we'll go into underwriting and risk selection, and we'll kind of round out the discussion with claims. So to get started, I think trying to be really curious from your perspective. I know you've been both on the insurance side and now in the manufacturer OEM side. What do you see as some of the common insurance products that are being distributed through embedded insurance? Maybe you could give some examples of ones that you're specifically working on.
Sure. Thanks, David. We're in an interesting spot with Volvo Financial Services. We straddle both, manufacturing and the distribution of financial services, including insurance. And so for us, it means having to have a good understanding of the trucking business, the construction equipment business, but also the nuances of how our customers buy insurance. We have customers that are as small as, one person with one truck, all the way up to enormous fleets with thousands of trucks. So, as the dedicated financial services arm of the AB Volvo group out of Sweden, we have a unique position in the market in that our customers are Volvo and Mack customers. We also own Mack trucks. So, for us, there's a spectrum. There are certainly the compulsory products that our customers need, particularly on the truck side, physical damage, liability, et cetera. But then from there, we really try and take a look at their businesses holistically and get a sense of what their needs are, regardless of what industry they're in. You see some recurring themes there. We have traditional digital connected conduits that we distribute through. We have embedded aspirations, and I think that those are getting closer each day. For us, regardless of the product, it's about convenience, and particularly in our line of work, it's about safety. It's about enabling the drivers to get through the day safely and get home at night safely. So to us, embedded is just as much about the customer experience as it is about non-distraction, right? And enabling uptime. When their wheels are turning, they're making money, and they're safe, and they're getting the product from point A to point B. So it's sort of a unique spot that we're in, but we think that the embedded piece of the insurance business holds a huge promise.
Terrific. I really like the point about enabling uptime, because I think from most insurers' perspective, they think of managing the risks of assets, but they don't think about the actual business that truckers are in, right? They are in the business of delivering things to people and making sure that our supply chains are working. So if we can be supportive of that, it's not just the benefit for the truckers themselves, but for the entire economy. So we'll definitely come back to some of those products that you mentioned and some of the mechanics of that. But I wanted to give Chuck a chance for two things. One, Chuck, I know InsureMo is a technology company, so we'd be really curious your perspective on how you tie into creating embedded transactions and where you've seen products that lend themselves to a successful embedded insurance venture.
Yeah, sure. Thank you, David. Glad to be here. So InsureMo, first of all, is a cloud-native, API-driven and microservice architectured insurance platform as a service. So it's essentially a business infrastructure platform to develop and connect digital apps within a global insurance ecosystem for insurers and brokers and agents and MGAs, InsurTech, fintechs, core system vendors, and of course, many types of embedded insurance offerings with non-insurance brands. And we have seen and experienced many different types of products that InsureMo lends a hand in. And one of the definitions in the industry that we come across is what is defined as embedded insurance. And typically, historically it's come out of the affinity group type of associating brands to selling insurance products like credit card companies affiliated with your university. But over time, and more recently through digital solutions like digital technology solutions like InsureMo, we have come to relate embedded insurance through point of sale. But it's not only through the point of sale transactions. It could be through aftermarket, or it all could be sold through a non-insurance brand through the traditional value chain that Trenum alluded to earlier, or off of websites. So some of our experience across the spectrum, working with the automotive manufacturing industry, we see obvious coverages that are sold, like the physical damage, the liability, and those typical auto insurance, but distributed through auto manufacturers. We see banks and fintechs and credit card company clients of ours that are distributing insurance products, including life insurance products or loss of income, or even, generally speaking, where auto and home insurance, if that's what it makes sense. Various countries have different regulations on how a non-insurance brand can distribute insurance products between different countries. It may differ. We see a lot of travel products, airline companies of ours, credit card companies, clients of ours would typically sell, travel insurance related to delays or personal accident. One of our major clients in India, for example, process over 700, close to 700,000 micro insurance policies a day on India's travel train network for personal accident, right? So there's a lot of different variation, but there's also a lot of different volume needs and scalability when it comes to embedded insurance. And we can, there's lots of industries, so we can take the whole time talking about all the spectrum of different embedded insurance products that are out there that can be supported by the likes of InsureMo.
Makes sense. And I think one point that I really pulled out of that is people think about what makes sense for embedded based off of how the transaction is done. And typically, or at least recently, a lot of the theme has been around point of sale and being contextually relevant. But I think, Chuck, you made really strong expansion of that, which is, if you look to the roots of embedded, where it started, this was affinity groups, like you mentioned the example with the credit cards in the university. But in this world, we can look beyond just the point of sale to aftermarket opportunities, because if you own the relationship with the customer, why would you stop at the point of sale when aftermarket may actually be a better opportunity, because you know more about the risk profile of your customer, and you may be able to make better risk selection decisions based off of how they actually made that financial transaction with you. Right. So really like that point and some of the examples you shared. So now that we know what's possible or what's available, I think the next logical question is, if you have a successful embedded insurance initiative, what makes for, a good non-insurance brand partner, or one that's not the greatest? Maybe Trenum, you could start us off on that. What makes for a good non-insurance partner?
Sure. Well, we are a non-insurance partner in some ways, and in other ways we're an intermediary. I think that the best experiences that we've had are when we align ourselves with the really the subject matter experts, niche by niche, that are able to help us across product lines and across customer segments. One thing that one area that Chuck pointed to was just the breadth of potential with a wide variety of customer segments, which we have as well, and they buy differently, and so therefore we have to sell differently and make our products known to them in ways that occur, call it before, during, and after the point of sale. So we have to have a plan in place to make sure that they know what we have before they're even thinking about the transaction that's related to the insurance sale. So there's that piece, certainly the uptake at the point of sale, and then the tremendous cross-sell opportunities for us are always there. And to your point, David, the more we know about the customer, the better we're able to reach them in subsequent months and years. And one thing that I will add on the embedded insurance front is, I'm always interested in embedded, yes, but optionality within the embedded outlay of product or products. So, once a customer decides to opt in, right, and maybe it's a data-driven type of program, just the fact that they opt in and they're willing to exchange data, right, for that product or that service, to us, that's a good sign. That means it denotes a transparency in the way that they run their business. So that data point in and of itself is a point in favor for the customer from a risk profile standpoint. So plenty to do and plenty to explore past the point of sale.
Absolutely. So I think if picking one piece out of that, understanding customer segmentation, cross-selling opportunities, and being able to hone in on the right opportunities for the right people is we'll call it prerequisite for a non-insurance brand to be successful with it. I'd be curious your perspective, Chuck, on what are some of the things that make it more difficult? Are there certain industries that tend not to be able to work with their customers, have longer value chains, or are shielded, that you've kind of maybe had some attempts to go embedded and then maybe stepped away a little bit?
Mm-hmm. Well, I think that if you look at embedded insurance as we see it today, and the advancements of the digital technology platforms like InsureMo that has enabled companies to, non-insurance brands in particular, to take on the ability to either be an intermediary and or sell insurance, if you will, through the means of point of sale or aftermarket on within their brand assets. That has certainly created a lot of opportunities across many industries. But one of the things you got to look at, whether you're an insurance company, whether you're a distribution partner, whether you're a non-insurance brand, when you're looking at this and saying, hey, can we offer our customers a better customer experience? Can we offer a better, cheaper insurance? Can we employ better underwriting techniques for judgment, rendering, pricing, tiering, whatever that means, the value means to that particular entity I named earlier. You really got to look at the product or the service that non-insurance brand has to offer, right? And what's that relationship with insurance, right? So if you're selling equipment, if you're selling vehicles or trucks, right? If you're someone on a consumer basis, you're investing a lot of money in a big travel or big vacation for your family, or maybe you're taking out a big loan for a home or a home improvement, right? Losses in any of those areas could jeopardize your financial well-being as a person, as a family, as a company. So embedded insurance advantages are best leveraged by those products that are associated with those kind of losses. If you're buying jeans online, not so, right? Tear jeans, they don't fit you anymore, what have you. There's really no insurance for that, so you can cross that out the list. But what also is very helpful within the subcategory now of those products or services that are sold, online or aftermarket, point of sale or aftermarket where you can sell insurance. What's extremely helpful is if the product or service is part of a well-respected and well-known brand, like Volvo, right, or Tesla, right? They have a big following. They're well-respected. They know they have levels of trust with their customers. They both have sets of customers that are following them through buying the products or leasing the products or financing the products, year in, year out, as companies go from, 3 trucks in a fleet to 100, they're going to stick with the brands that they trust, the trucks, for example, that have the quality or the advancement in technologies from gas power to electric, or whatever that is that makes them feel like they want to stick to that brand. So making it so selling insurance through point of sale or aftermarket is going to be a much easier effort to do and enhance that customer experience even more. Levi's and Disney both have great brands that with big followings, but they're not going to be, there's no trust correlation directly to the impact of buying insurance, right? As I explained with the Levi jeans, not needed. Travel insurance, when you're buying it for vacation, great, but it's not going to be tied directly to Disney in this case. And then the last thing I want to make a note, though, is that a lot of these companies that are really good for embedded insurance, and maybe Trenum could talk about this from a Volvo perspective, they own lots of good data, historical data, captured over lots of time about their products and experience about the type of buyers, right? And that's helpful for underwriting. That's helpful for pricing, tiering, selections, etc. And the more you can leverage that for embedded insurance, the better pricing you're going to get, the better risk selection you're going to get for yourself and your customers. And with the advent of telematics, we're just getting so much more data involved from all of these products and services like we haven't before, right? Tesla has lots of cameras around the car, bringing lots of data in, and so, obviously in some unfortunate situations, but that can help with helping to underwrite a better, improve underwriting experience through the embedded insurance process. So I think that third element of having good data collected over time is a great quality, a characteristic to have for a non-insurance brand.
Yeah, so really, I guess to summarize the three areas that I pull out of that is, first, to be successful for an embedded initiative, it has to be related to something that's meaningful to the consumer. Like you gave the example, Chuck, of home improvement or a large Disney vacation that you're looking to protect that investment. It's much more meaningful than buying a pair of jeans that may wear out. The second piece being about, it has to be connected to a well-known brand, and that brand has to transfer some type of trust value in the expression of what they're doing. So although Disney would be great as an embedded insurer, you don't think of Disney as someone, when you pop on the TV for Disney Plus, that's going to, protect your house from burning down. So there has to be association, and then of course the historical data. So I think those are all good tips, and maybe it would be fair to say that if at least two of those pieces are not covered, and you're a brand sitting out there thinking, should I do embedded insurance? You might want to pivot to a line of business or a different type of relationship with the customer to make sure that you get those 2 of 3 or 3 of 3, if better, to really roll out a program. So I know, Chuck, you mentioned data. You said Trenum has some data. So why don't we shift into underwriting and talk a little bit about that? So where I wanted to start with underwriting is really to address what I'll call a myth or fact that is very common, a common critique that I've heard about embedded, which is, embedded only works for simple lines of business that have the same price for everyone. Think Apple Care warranty for all the Apple products, or the AIG insurance you can get when you purchase your Delta flight. But I know, Trenum, you've explored or mentioned lines of business that are substantially more complex, right? Whether it's the compulsory auto or it's things that are related to the business operations. So curious your perspective. Is it a myth, or is it a fact that embedded can go out to more complex lines of business, and maybe share an example along the way?
Sure. I think the promise is there. We've pinned a lot of hopes into it, and we deal in some pretty complex lines that require, if you look at the way they're traditionally underwritten, a lot of man hours, a lot of paper, and a lot of ink. But that being said, as we go forward, to both your point and Chuck's, we do have a lot of information. We have a lot of data. The trick is separating the signal from the noise and finding what those data fields that are really simultaneously valuable to us, to underwriters, our technology partners, and to the customer. Oftentimes we operate at a distance from where the customer sits. At Volvo and at Mac, we try hard to keep in touch with our customers. It's a very specific business, and if we don't know it really, really well, they'll know that we don't know it very well. So when we design products and we attempt to use data to drive pricing, to drive behavior, to gather analytics, we have to do it in a way that respects the fundamentals of their business, some of the old-fashioned pieces of their business. And yes, we are using, what we like to do is we like to start, we like to crawl before we walk and walk before we run. What does that really mean? It means let's define what the data fields are that make the best sense to get liftoff, right? With any kind of a product or any kind of an underwriting process. And so you can have hundreds, if not thousands of those, but what are the 10 that really matter? What are the 5 that really matter? Let's keep it simple and iterate from there. So yeah, the lots of complex lines of coverage, obviously for us, the construction equipment end of the business from a risk profiling and from a pricing and from an actuarial standpoint, it is more straightforward. Quite simply, these are tough machines that don't move around very much and they don't go very fast, and they can take abuse in a hailstorm. Trucks, on the other hand, 80,000 pounds going 80 miles an hour down the road, that's a real risk. And then, as Chuck pointed out earlier, once you start layering in battery electric vehicles and the charging infrastructure required for that, it's a completely new environment in terms of risk profiling. So I think that when you have something that moves like a truck, and you do have sensors, you have cameras, you have ELDs, you have the truck data itself, it is a data-rich environment. The trick becomes harnessing the handful of relevant fields in an efficient way to price it. We know that insurance companies need to get their rate, but at the same time, customers are still looking for a good deal. So how can we help customers earn their way into the best possible deal, leveraging that data? That's really what we're interested in, as well.
So I would consider that myth thoroughly busted. And I think, Trenum, you really went into the question that I was going to ask next about shifting away from, traditional human-centric underwriting to what you had talked about, using all the data fields that are the most important to really understand your customer better. But I'd be curious, Chuck, your perspective. Like, it's one thing to collect the data from one system of record, but it's another thing to pass that information ultimately between the non-insurer to the insurer. So curious what you think are some of the important things to make that happen in a non-manual way to actually make embedded work.
Right. If you look at our recent history, I would say in the last, 10 years, and if you look at the curve, it's even more so in the last 5 years. There's been a lot of InsurTechs out there that has offered a lot of data services to be ingested through the underwriting process, and as long as the quality of the data is good, it could be leveraged in an underwriting platform of such, right? And as long as you have those connections on an InsureMo platform, for example, who can connect those data sources, or partners, or underwriting technology partners like we have with Intellect AI, those are the kind of things that a platform can offer from a day-to-day insurance world, in the non-embedded insurance world, to the embedded insurance world, right? There's a lot of data, for example, in the personal auto industry that is used to look at the driver record, look at the vehicle cost trends, to straight through process underwriting for policy auto. So, and that's a high risk, complex, product. So it is possible, right? It is possible to take in some complex products, leverage and learn what we've done in the non-embedded insurance world, and bring that into technology platforms like InsureMo, and bring that world into the embedded insurance world. And it's possible. We've done it today. We have ecosystems that we built with many of the car manufacturers like BMW, Mercedes, Geely, Ford, etc., where lots of insurance transactions are run on InsureMo for auto insurance, for complex risks like that.
Yeah, I like it. So it's like the hard work that you took for your traditional lines to automate them, to introduce RPA into the mix, you can kind of port that over and apply those same lessons to embedded. So use some of that institutional knowledge. So we really like that. I know keeping track on time, we're pretty much at a wrap. But what I would say here is there was a lot more that Chuck and Trenum could have dug into. So how I'm gonna kind of leave you guys off here is, this is part of a discovery that we're all gonna have on our journey to knowing embedded. So this is kind of a cue to get you thinking about the InsurTech Spring Conference. So you'll have an opportunity to listen to Chuck's panel, really dig in on that topic of embedded at the point of sale, and hopefully spend some time with him and the InsureMo team to learn more about what you can do to make embedded actually work for you and your non-insurance partners. So just a reminder that obviously tickets are still being sold for this. We will probably reach out to you in the next, we'll say, several days to a week with the recording. So if you missed anything or just want to go back and take some notes, we'll share that. We'll also be sharing promotion related to the spring conference. So I want to thank both Chuck and Trenum for sharing their insights today. I know I certainly learned a lot about some of the key success factors to making embedded insurance work, and hope you did as well.